Cathie Wood and Elon Musk just mentioned SoFi to hundreds of thousands of live listeners on a Twitter Spaces. This week, the chief technology officer sold stock, the November PCE report came in, and a massive amount of borrowers are missing payments on their student loans. Meanwhile, SoFi stock broke above the $10 mark. We weren't able to hold it. It fell back down. The stock is still trending positively. Lots of news this week. Let's dive right in. The first thing that I'll say is that a portion of the news I had initially intended for this video I released on Tuesday. So I'll very briefly skim through that for those who have not yet had a chance to watch it. And while we're on that note, if you are new to these videos, I do weekly recaps on all the pieces of SoFi related news content, chatter, rumors, and stock events that I see throughout the week. So follow and subscribe to see that content regularly. So in my initial video, I talked about how small caps and mid caps have an outsized opportunity to run in 2024 as a result of them having lagged mega caps for several years from a performance perspective. I also mentioned how short sellers are still holding strong to their positions despite the stock being in the high $9 range, about $9.80 as of this recording intraday on Friday. SoFi is up over 5% on the week alone. We'll see where it closes out. As I mentioned, the stock did break through that $10 psychological wall on Tuesday after having been rejected twice before on Monday and subsequently falling back down on Wednesday, which is likely algorithmically influenced profit taking that we're seeing towards the end of the year. And it seems as though SoFi can make another run into the double digits and sustain that move upwards. I think that's a key factor right now. Can they sustain that move higher? Because essentially, as I mentioned in my video on Tuesday, this puts shorts in a very precarious position because if they do not cover their positions, they may face higher losses as a result of SoFi announcing Q4 profitability at the end of January, which is basically around the corner. And if short sellers are unsuccessful in bringing SoFi's stock price back down into the $8 or even the $7 range, then they might be forced to cover altogether if the stock climbs much higher, which could potentially lead to SoFi even climbing higher as a result of this. Now, one thing to note is that the market will be closed on December 25th for Christmas Day, and when we return on the 26th, around that time is when we should be seeing the NASDAQ updating their latest short numbers. If you'll remember, if you've been following along, short numbers per NASDAQ, the most recent ones we have are of November 30th, where we had about 142 million shares sold short, and the mid-December filing is going to be coming out next week. So this is important because this allows us to see whether or not these shorts are actually covering their positions or whether they're digging their heels in further and doubling down on their positions. However, this is just a minor recap of the short argument and a much longer video that I had on Tuesday, so definitely check that out at the end of this video. It's going to be tagged. Now, let's move on to some news that I haven't covered yet. First, I want to get some of the smaller stuff out of the way. Vanguard added 2.5 million shares to their position. They're the top holder of SoFi. And also we got the November PCE inflation measure, which came in this week lower than expectations. PCE fell at 2.6% versus expectations of 2.8%. Core PCE fell to 3.2 below expectations of 3.3. And this is the lowest PCE inflation number since May of 2021. Now, this is good because it pushes the market in a direction of a soft landing, which becomes more likely, essentially, because these are the types of metrics that the Fed wants to see in order to eventually cut rates again. On the other hand, were inflation to go up sustainably, the Fed would be in a much more difficult position as they've paused the rate hikes. So this is definitely a good measure to see because it reinforces their decision that they made to pause rate hikes. Moving on, SoFi's Chief Technology Officer Jeremy Rishel sold 56,273 shares for $550,000, about a $9.78 price on those. And this is really nothing out of the ordinary or new. Jeremy Rishel has sold multiple times throughout the year, along with the other executives at SoFi, except for Anthony Noto. The document itself, posted on SoFi's IR page, highlight that these were restricted stock units, and this was a form of compensation. And it's also the year end, right? And so there's also tax obligations that you have to keep in mind. There's also vesting schedules that you have to keep in mind as these executives are periodically given more shares. So this is definitely nothing out of the ordinary. However, one thing I did mention on Tuesday when this news broke is that the stock basically brushed brushed this off. And as of this recording, it's trading at the same level that the CTO sold at. So it's by no means a big deal. The stock didn't really react to it. It's becoming more normalized, I feel. And many investors, especially the long-term ones, understand that this is just a form of compensation and that this is a natural occurrence that will happen periodically. Moving on, I posted on Monday a piece of news around student loan borrowers. About 8.8 million, or 40% of the 22 million total student loan borrowers, missed payments in October. The article I quoted from MarketWatch said that it wasn't clear from the data whether these borrowers missed payments because they faced logistical challenges accessing repayment plans or whether it was other reasons altogether. So that's definitely something to also consider. But overarchingly, I wanted to share some high-level thoughts on this. Of course, the headline number is scary because the first association is whether this is going to heavily impact SoFi student loan numbers. But if we look deeper, this program has been paused since March of 2020 when the moratorium started. So it's going to take a little bit of time for people to get back into that habit of consistently paying their student loans. Even anecdotally speaking, if I had a monthly payment that I was making and I didn't make it for 3 years, yeah, I might miss the first month. I might forget the first month or the first 2 months even until I get back to that habit. I think that's a more minor sort of psychological point to make. And a lot of people are jumping to the conclusion that times are tougher and these students can't afford to pay back their loans, which I don't subscribe to that idea because just look at the spending habits in the economy, right? So I think the more major point to consider around why these payments have been missed is with regards to the Biden administration, who introduced a 12-month grace period, which ensured that all financially vulnerable borrowers are not considered delinquent, are not reported to credit bureaus, are not placed in default, or are not referred to debt collection agencies should they miss payments. Now, when I first talked about this months ago, when they were introducing this, I mentioned that this removes essentially all of the negative consequences around borrowers not paying back their loans. And so you don't have any incentives for borrowers to pay back their loans, especially the ones that are maybe in a lower socioeconomic status or that have lower amounts of disposable income. Now, what I will say is that this was a much more worrisome situation back then than it is today, because in between that time when we heard about the on-ramp program and today when 40% of borrowers have missed their payments, we saw SoFi management on the earnings call and subsequent fireside chats and in their Q3 earnings report highlight the initial numbers for student loan originations essentially being higher than what we had expected them to come in at, so they're ramping up faster. And much of this is attributable to the fact that SoFi borrowers simply don't fall into the same buckets as the 40% of people who are missing their payment on student loans, whether that be from negligence or as a deliberate decision that they're making with their finances as a result of this on-ramp. I don't know. Simply put, SoFi's target audience just falls under a different socioeconomic status altogether. So at a high level, I'm not very worried about this news until I actually see it making a negative impact on the student loan numbers that we're going to be reporting in January, and until I hear management actually flagging this as a concern that they have. Right now, I'm not too concerned about it, simply for the fact that we're talking about two different groups of people, and SoFi really prides themselves in having the highest quality borrowers in general. Okay, now let's move on to our final piece of news, which came out last night on Thursday during the Twitter Spaces between Cathie at ARK Invest and Elon Musk, where they had an almost 2-hour conversation on various topics surrounding Tesla and Elon's other companies. However, there was a small plug that Cathie made, and it mentioned SoFi.
Once you say something on X, it actually becomes public information from the SEC's point of view. We've seen that tested a few times. And so I just wanted to announce that we're pretty excited. For the first time, beginning in January, our venture fund will be available on SoFi. Right now, if you want to buy our venture fund, the Titan app is the way to go. That's an Andreessen Horowitz funded company, and they've been great. But we are expanding, and we'd love, again, in this movement towards democratization of VC, if any other platforms want to participate in this movement, we're not exclusive, and we're very excited about the possibilities. So thank you for letting me do that.
And it's also a big part of bringing the broader base of a huge number of non-accredited investors who'd love to enter companies like yours, Elon, of course, and we already with the ARK Venture Fund in SpaceX and X, and we'd love to do others, and really allowing, obviously your companies are extremely well funded, but for many companies they don't have access to capital necessarily at the scale you've built without going public. So we think that's a really exciting potential for companies to stay private for longer. And really
that sounds great.
Yeah,
that sounds really cool.
She mentions that the ARK Venture Fund, which holds, among other names, SpaceX, which I think is the world's most valuable private company, and X, formerly known as Twitter, will both be available starting in January on SoFi. So essentially, through this venture fund, investors on SoFi will have exposure to some of these names that are, high in popularity but are unavailable to retail investors due to that accreditation process. So it did cause some buzz on FinTwit because she mentioned this to hundreds of thousands of listeners. I think the last time I checked there was 800,000 listeners that had heard that space. To the point where some even started speculating around the partnership potential between X and SoFi, seeing as one of the things that they chatted about in that space was Twitter's ambitions to become a financial company. And people essentially put two and two together to say, well, SoFi comes with a CEO who used to work at Twitter, who knows the inner workings of the company, who is pro-Elon from what we've seen with their interactions online, and with a company that already has a bank charter. So if X were to become a payments company, a natural synergy would be a merger or something of the sort with SoFi. However, I'm not going to entertain those speculations. Suffice to say that this Twitter space is essentially another example of SoFi's terrific brand and product offering. The fact that ARK Invest has been getting more and more involved with SoFi, they've been buying up more of their stock, they've been adding to their position, and now they're also partnering to offer some of their funds onto SoFi, is a testament to that. And ultimately, all that does is it advertises the company organically so that people are talking about SoFi. People have it in their mind, and it increases that unaided brand awareness. It's also something that entrenches ARK Invest much deeper into the SoFi ecosystem, right? So all positive news on that front. Those are all the major news pieces that I personally saw on X this week. I do think the short interest piece has been, the more interesting one, no pun intended, because that really has a big potential on the stock and where it could potentially go, especially as we break into the double digits, if we break into double digits next week. That remains to be seen. I'm sure we're going to be talking about it later tonight in the SoFi Weekly Podcast, our special Christmas episode on the SoFi Weekly Podcast. And as a reminder, the market will be closed on December 25th in observance of Christmas Day, and I'll be here next week to cover more SoFi-related content. Now, if you enjoyed this video, please feel free to subscribe, like, and share. Merry Christmas, and thanks for watching.